Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 4th of January. US dollar comeback. The US dollar is on the rise after the release of the FOMC minutes and a number of financial indicators with good results. According to the FOMC meeting minutes, policymakers showed worried about the currently low inflation rate, saw recent tax cuts as a possible boost to consumer spending, which could in its turn accelerate the inflation rate. Overall, the economic balance remains the same, with low unemployment and good growth on the one side, stubbornly low inflation on the other. In the future, the Fed is expected to continue to pursue a gradual approach in raising interest rates and could pick up the pace should inflation rate acceleration allow it. Currently, the market has priced in a 73.8% probability for a rate hike in March, while it expects the Fed to remain on hold in the January meeting. Japanese hard-to-melt snow. BOJ's Governor Kuroda stated that BOJ will patiently maintain its loosely monetary policy. One of its characteristic comments was, "Unlike snow, Japan's deflationary mindset won't melt easily." Japanese yen had good financial data regarding the manufacturing PMI coming out during today's Asian morning, which underscored a steady economic growth into 2018. Specifically, the Nikkei manufacturing final PMI for December, despite missing the preliminary figure slightly, still was the highest since February 2014. Further on, Japanese Finance Minister Aso stated that the economy has changed and the labor environment has shifted. Hence, there could be an expectation of the labor market delivering an increase in wages, which could in turn boost spending and inflation. Should that be the case, we could see an ending in the monetary easing of BOJ. However, this scenario is still considered as far-fetched. The US dollar Japanese yen had a clear break above the 112.30 support line yesterday after the release of the FOMC meeting minutes until late today's Asian morning. The pair could be influenced from the US fundamental news due out today. Other than that, given yesterday's strengthening of the US dollar, we expect the pair to continue to trade in a sideways manner, with the risks this time being tilted to the upside. Should the bulls take the reins, the pair could break the 112.90 resistance line and aim for the 113.15 resistance level. Should the bears take the driver's seat, we could see the pair drop below the 112.30 support barrier and head towards the 112.02 support zone. As for today's other economic data, during European morning, we get the Eurozone's final market composite PMI, which is expected to remain unchanged. Also, we get UK's market CIPS services PMI for December. The indicator is expected to remain unchanged, however, any surprise could move the jumpy British pound, especially cable. Cable, as expected, was influenced by the US news and dropped yesterday, and during today's Asian morning, it rebounded somewhat. In all of the aforementioned price action, the pair remained above the support level of 1.3460 and below the resistance level of 1.3620. It should be noted that the pair remained above the upward trend line, which started on the 27th of December and continues until these lines are written. The pair could continue to trade in a sideways manner, with the risks tilted to the upside. As yesterday, we expect the pair to be influenced by fundamental news from both sides of the pair. Should the pair come under selling interest again, it could break the 1.3460 support line and aim for the 1.3330 support barrier. On the other hand, should the cable come under buying interest, we expect the pair to reach the 1.3620 resistance level, and should that be breached, it could aim for the 1.3684 resistance level. Later on, we get from the US the ADP National Employment Report, which could move the greenback, as it is perceived by many investors as a forerunner for the non-farm payroll report, which is due out tomorrow. Last but not least, we get the crude oil inventories, which could prove a market mover for oil, given the commodity's recent rising trend. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Iosif, analyst at IronFX, wishing you solid trading.